So good afternoon and welcome to the Stormeur Group IPO Investor Webinar. I'm Jane Morgan, Investor and Media Relations Manager, and today I'm joined by Vivek Eranki, the Chairman of Stormeur Group. So Stormeur Group is currently leading up to its initial public offering, which is scheduled for the month in October. The IPO is currently active and available through partnership with liquidity.com.au. So Stormeur Group is looking at its next exciting stage of growth as it seeks to expand its reach around the nation following the IPO with new clinic locations and more. Today's presentation will be followed by a Q&A session. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. To tell you more, I'm going to hand you over to Vivek.
Good afternoon, everyone. My name is Vivek Eranki, and Jane, thank you so much for having me on. So welcome to the investor presentation. So a little bit about Stormeur. So we are set to IPO on the ASX. Stormeur owns 100% of Cosmetic, which is the operating company, and the IPO is set to raise $6 million with $1 million worth of oversubscriptions. And the whole reason for the IPO is to expand our existing clinical network, as well as potentially looking at acquiring businesses both domestically and internationally as well. So a bit about myself. I founded Cosmetic, and I hold qualifications in both business and medicine as well. I've got previous experience in successfully scaling up medical companies and successfully divesting out of them as well. So previous to this, I've set up cosmetic dental groups that have been acquired by a large corporate, as well as general practice and corporate health clinics as well. So a bit about the board. I'm the chairman of the company. On the board, we have Roger Blow, who's been on the board since 2021. Roger's got extensive experience in medical regulatory law, as well as media and defamation law as well. We have Sam Wright, who's got extensive ASX experience in revenue generating healthcare companies. And Tess will be joining our board shortly, and she has got a tremendous amount of experience in governance and marketing as well. The board is advised by very seasoned advisors. So we have Dr. Neera Sivathasan, who has medical licenses in numerous countries around the world, including UK, France, and several Asian countries. And Bronwyn Grant, who was the previous CEO of Nexus and Montserrat, and currently is the CEO of Cura, and has got a lot of experience when it comes to medical licensing and permits. So a little bit about the cosmetic market. The cosmetic market itself is worth $35 billion US dollars globally. And Australian cosmetic market is worth just shy of $1 billion US dollars. Australia, however, spends the highest amount per capita compared to any other country on cosmetic treatments. And the good news for us as a business here is that we are not a trendsetter in this sector, but rather we follow international trends. So this means that Cosmetic is able to forward project based on what is happening overseas. And this provides us a greater degree of security in terms of future decision making. Another area of note in this sector is Asia. So Asia is a large part of the sector. And in Asia, there are two different parts of the cosmetic pie. There is your Korea and Japan, and these are the existing leaders in the cosmetic market. So a lot of the Botoxes and fillers are manufactured in Korea, and Japan manufactures much of the cosmeceuticals within this sector. Then you have the emerging and the burgeoning aesthetic markets, and these are your Indonesia's, Thailand's, Philippines, and India's. So in these areas, the middle class is growing and cosmetic treatments are getting more and more acceptable. And this push is coming mainly from social media. Now, in this sector, there's also been tremendous amount of consolidation as well. So Blackstone recently invested into Lazio, which is a large French group. As you're all aware, KKR has invested into LCA back in 2017 for $650 million. API has acquired Clear Skins, and they had 44 clinics at the time of acquisition for $127 million. And API has also been acquired by Wesfarmers, and Wesfarmers has separately acquired Silk, which has then acquired Unique, Australian Skin Clinics, Eden Laser Clinics, and Laser Lounge. Sonic has acquired Artisan. So basically what's happening is any business in this sector that is scaled is being acquired and is sitting inside the portfolio of a public or a private company. So a little bit about Cosmetique. We established in 2017, and we've currently got 17 clinics nationally. One of the big advantages about establishing in 2017 is that we've seen what works and what doesn't work with our competition, and we have then leaned into what works, avoiding some of the pitfalls. So with that in mind, we are 100% corporate owned. We don't have any exposure to franchisees. And being a non-franchise is unique in this sector because most of our competition, if not all of them, are actually franchise. And they are currently dealing with issues on the franchisee-franchisor litigation front, for which we have no exposure to. Cosmetique has more than 95,000 active patients in the database, and we have a significant market and media presence as well as industry influence. So we've been in the news more than 200 times in the last couple of years, all of them great, as well as we've won numerous customer service awards, and we are currently one of the finalists in the Customer Service Institute of Australia awards as well. On top of that, we are also the only company that is accredited by QIP in the field of cosmetic injectables. So a little bit about our age demographic, and we see this as a key strength. So I would consider this as the most important slide. So the vast majority of our patients fall between the ages of 18 and 35 years old. So when you look at the prospectus of Silk, vast majority of their patients are over the age of 35. And we think this is important because the injectables efficacy, in a way, drops off after the age of 55. So it is more efficacious under the age of 55, especially in the younger demographic. This means that we have the greatest amount of runway when it comes to our customers compared to our competition. So this means that we have increased a lifetime value of the customers as well. The second thing about this is the behavior of the customer. So patients who are younger, so typically 18 to 35-year-olds, they tend to share their cosmetic experiences on their social media, whereas the older demographic tends to be more discreet with their treatment options. So we receive a vast amount of publicity and vast amount of eyeballs and marketing simply from our patients live streaming their treatments. And this is a luxury that is usually not afforded to our competition. On top of that, this in a way makes us a little bit more resilient, or quite a bit more resilient, when it comes to economic downturns and recessions. The reason being, younger demographic don't have other financial commitments. So they don't have to deal with mortgages. They don't have to deal with school fees. So they are more concerned about their aesthetics and the way they look, and they allocate more of their resources towards these endeavors. So looking at at what the gross profits are within the sector, so injectables themselves, because Botox and fillers are quite expensive, have a gross profit margin of 60%, whereas laser hair removal has a gross profit of 99%. And the reason for that is there is no ongoing need for consumables except for the gel for laser hair removal as opposed to the injectables. We have recently rolled out laser hair removal in 2023. And previous to that, we were exclusively within the injectable sector. The other sector that we are not in, where there's high gross profits, is the cosmeceuticals. So these are your moisturizers and other serums. And now, if you look at our competition themselves, LCA, for example, gets the vast majority of its revenue from laser hair removal, and Silk gets more than 50% of its revenue from laser hair removal. We have forecasted very conservatively into the 20% by the end of next year. Into laser hair removal. So a little bit about the clinics. Our clinics, typical fit outs are between $90,000 to $150,000, and our laser machines are typically between $30,000 and $40,000. And the reason for that is we buy them in multiples of 10. And staffing for the clinic sits around the $80,000, assuming a full-time nurse is sitting there every single day. And the rent on the premises typically varies between $50,000 to $80,000 a year, and other variable expenses, along with the consumables and Schedule 4 medications, sit around $150,000. So for $500,000, we can get one clinic running in 1 year with an assumption that we will see 0 patients. Now, if you look at what the break-even point is, the clinics typically break even between the 12 and the 24-month mark. So a clinic that is established for us is Coburn in Western Australia. and the revenue from the clinic sits around $780,000, and the profits from the clinic itself sit around $500,000. Now, if you look at what these centralized fixed expenses are, and so these are the expenses that we don't project to increase drastically as we increase our clinic footprint, are your central administrative costs. So these are your general managers, your CFO, your board of directors, as well as the marketing expenses, which are isolated per each state. So as long as we're within those states, we don't project an increase in our marketing expenses, as well as legal compliance and governance. And the legal compliance and governance is a part and parcel of this sector. And there's been a change in, more of an update in the regulatory framework within this sector back in 2021, which makes it increasingly more expensive for the smaller players, but makes it much more cost effective for larger scaled players such as ourselves to operate within the sector. So when you look at where the treatments lie, the vast majority of our treatments are injectables. 63% is Botox and 31% is fillers. And currently laser hair removal sits around 6%. Keeping in mind, we just introduced this in 2023. We've seen an upward trend in the spend per treatment. And the reason for this is because your average patient typically comes in for Botox, then they get fillers done, and they have further treatments done as they get more and more comfortable with cosmetic treatments. And this is why we've seen a increase upward trend in the gross profits as well. And that's been augmented by the fact that there are more and more patients getting laser hair removal, which has a significantly higher gross profit compared to the injectables. So this is our current uptake of laser hair removals in the last few quarters, and we've seen an upward trend which is increasing as well as it's becoming more and more acceptable amongst our patient demographic. The other thing that we've done quite efficiently is allocation of marketing resources. So in the last 12 to 18 months, we have successfully reduced our marketing costs while still increasing the number of patients that the clinics are seeing. And this is because we've taken a very digital heavy strategy. So we have cut all the radio ads, TV ads, your back of bus ads, billboard ads, and we focused purely on social media. And the reason for this is we were able to allocate these funds into the IPO or the pre-IPO process. So these are the use of IPO funds. So the vast majority of that is expansion of the existing footprint, followed by potential acquisitions. In the prospectus, we've stated that we are looking at 4 clinics in the next 12 months. To be conservative, we think that the upper limit for cosmetic sits around 50 clinics, 45 to 50 clinics nationally. And concurrent to that, we are looking at making acquisitions within the cosmetic sector and the cosmetic adjacent sector as well. So here is the current capital structure. So up until recently, I've been the 100% shareholder of Cosmetic, and we've done a pre-IPO seed round for $200,000, and that accounted for 2%. And we're looking at raising $6 million, and along with the shares, there are attached options as well, which are publicly tradable. Thank you, Jane.
Wonderful. Thank you for that, Vivek. I might actually just get you to stop sharing your screen there and we'll jump into some questions.
Sure.
And again, webinar attendees, please use the Q&A function, which can be found at the bottom of your screen. Let me kick off for now, though. So what percentage of the $1 billion cosmetic market in Australia are you striving for in the next 5 years?
Yeah, so we want to maximize as much of the pie as possible. So what we've done is we've been very strategic in the locations as well as the patients that we are going after. So with the locations, we are primarily going after the high density locations, so such as Sydney and Melbourne, and within those areas, the up and coming suburbs as well. So these are your outer rim suburbs where there's a much more younger demographic compared to the inner city suburbs that have a slightly older demographic.
Wonderful. Next one, you actually covered this a little bit in your presentation, but so what does a Stormeur group have in the way of IP or any other differentiator with major competitors?
Yeah, so when it comes to what we've done, we have set up the company with compliance in mind. So we are currently the only company that is accredited by QIP for cosmetic injectables. It is a very drawn out process to get that, but because of the experience we've got within the board and the advisors as well, we were able to do it rather effortlessly. None of our competitors were able to achieve that. On top of that, we've invested a lot of time and effort into optimizing the patient flow. So the reason for this is it is beneficial to the patient as well as the staff and the company's bottom line as well. The perfect example of that is our patients, when they book their appointment online, and 80% of the patients do, the patients are furnished with all the information that they need for them to have the treatment. So this is consent forms, this is information about the treatment, and that comes in a written as well as a video and audio format as well. So by the time they see a nurse, they're well versed with all the information. So the main advantage with this is we don't need to have a receptionist at every location. That increases our bottom line, and it increases the efficiency of the nurse as well.
What exactly does accreditation mean when you refer to Cosmetic being first in the country? And just secondly to that, can you elaborate on some of the regulatory and accreditation rather requirements?
Yep. So in terms of accreditation, if you look at your typical GP clinic and your dental clinics and your hospitals, they're all required to be accredited now. And accreditation basically means that there is a compliance and safety framework in place in order to follow best practice guidelines. So these frameworks are audited by a panel of experts. And when they review it, they look at it and say, well, this is at the standard that is expected. And what this does is this provides confidence, A, for us, B, for our patients, and C, for the regulators, that this company follows the best practice guidelines that are out there. In the field of cosmetic injectables, this is quite novel, simply because it is a new area, but we were able to achieve this, quite effortlessly. Now, in terms of the regulatory landscape, in a way it's shifted, but in a way it's been quite static as well. So in the field of cosmetic injectables, there has been a previous framework, but the framework was articulated more from a suggestion point of view. So that if you read the old documents, it says something on the lines of, we recommend you do this, or we recommend you do that. Now that's been updated in 2021 to effectively state that you must do this and you must do that. Now you will have to be fairly confident in order to not take on the recommendations provided by the regulators. So we've always followed them to the dot as well as more. And so the updated regulations really haven't adversely affected us at all. But what we did find is that a lot of the smaller players who looked at the recommendations as optional, it has suddenly made it a lot more expensive for them to operate in the sector. And a lot of the boutique players have thus far left the sector. And that's the reason why we've seen the consolidation in the market.
Thank you, Vivek. Next one. So if the current profit of mature clinic is roughly $500,000 per year, how much is this forecasted to increase once revenues from laser hair treatment increases, noting the 99% margins?
We are not required to provide a forecast, and that's why we're being very conservative. Obviously, the way we've set up the clinics, we are able to flex up and flex down quite significantly. So most of our competitors see a patient every 45 minutes to every hour. We are able to see a patient every 15 minutes. The laser machines that we acquired are also the laser machines that are, in a way, heavy duty. And what I mean by that is they're able to do more treatments over a shorter period of time without having issues such as overheating. And this is simply because it is a newer machine. So even if we were to assume that the mature clinics have plateaued off, which is a false assumption, but even if we were to go down that path and then forward project using the immature clinics maturing, we would see about $4 to $6 million increase in the revenue just from the investments made thus far. The other big benefit that we see with the laser machines that we have is that we are cognizant of the fact that places such as Sydney and Melbourne are quite culturally diverse. And our laser machines actually are able to treat people of various skin tones, whereas some of the older machines rely on a huge gradient between the hair and the skin. So they require dark hair and light skin. So so these are all dividends that we should be seeing moving into the future.
Thank you, Vivek. There's just a couple of questions here about the capital structure and options. So perhaps if you can elaborate a little bit on the structure and perhaps some of the details of the raise, including these options.
Yep. So the all the information is in the prospectus, and perhaps that's got a lot more detail than I'd be able to offer. But the raise does come with 1 in 5 piggyback options. And the reason why we went down the options path is that we want to give investors a second bite of the cherry and give them added value as well. So these options are tradable. And what these options do is they are priced in a way where the investors would be able to buy into the company at a later date at a discounted price, most likely.
Wonderful. Next question. So has growth to date been via acquisitions or greenfield expansion?
Growth thus far has been by greenfield expansion, and we've funded all the growth internally using internal profits. We've so far found that it is very efficient for us to open a new site and market our way into the sector. We are, however, very open towards acquisitions as well. So we're not anti-acquisitions. So far, greenfield sites have been very cost effective for us.
Thank you. I'm jumping around a bit here. There's quite a few questions coming through. So what's the capital cost per laser machine, and will all the clinics have them?
Yeah. So all the clinics for us, they're all exactly the same. So they're carbon copies of each other. They look the same. They feel the same. The treatments provided are the same. So the laser machines are exactly the same in all the clinics. The laser machines that we have, we get them at a significantly discounted rate, at approximately $40,000 a machine. We usually buy multiples of 10. And that's why when we roll out clinics, we usually roll them out in volume as well.
Thank you. There's just a question here on expansion, overseas expansion, in fact. So can you elaborate on any expansion plans, where and when would you look to acquire existing businesses or set up your own?
If you look at the prospectus clearly articulates that we are looking at opening 4 clinics in Sydney and Melbourne, and we are open to acquiring clinics both domestically and internationally. However, if I was to speculate, I would say that countries such as Indonesia, specifically Bali, Thailand, Philippines, and India are growth markets. Those are areas where we would be looking at acquiring clinics. We've already had discussions with numerous parties who specialize in brokering such deals, who specialize in the legal aspect of acquisitions. And we do have a couple of acquisition targets in mind. But again, these are opportunities that we'll properly vet out before we dive into them.
Thank you, Vivek. There's a question here that just says, can we run through other costs? Perhaps if you could just elaborate a little bit more on the kind of costs incurred, a business like Cosmetic, or perhaps the expansion costs.
Yep. So when it comes to costs incurred by the business on a day-to-day basis, we've optimized the costs of doing business by centralizing a lot of the expenses. We've also minimized the amount of wastage there is by allocating human resources towards areas where we would see the maximum benefit. An example of that is we have in Perth 5 clinics, and within the 5 clinics, if we find that some clinics are busier than the others, we would be able to deploy the nurses that are in the less busy clinic towards a more busy clinic in order to maximize the revenue there. Now, in terms of opening greenfield sites, the way we've structured it, we don't need to increase our marketing expenses. We wouldn't need to increase our central administrative expenses. So as we open more and more clinics, especially in the states that we already are in, our gross profits would be improving, given that the central administrative expenses would remain the same.
Thank you. And just further to that then, so what sort of timeline do you see for the expansion of these clinics, and how difficult or how much is involved in opening new locations?
Now, for us to do a rollout of a new clinic used to take us 6 weeks. It's now currently taking us about 8 weeks. And I'm sure everyone understands that construction's taking a little bit longer. So even if we were to be very conservative and say 3 months, that's how long it takes for us to open a new site. We've already got locations in mind in both Sydney and Melbourne. And the way we approach it is we know what demographic works for us. We know what demographic doesn't work. We double down on the suburbs where we know that there's a high percentage of our patients that reside within those suburbs. We've identified a few sites already, and we would be in a position to sign the leases and commence fit outs in the near future.
Thank you. And so regarding future expansion, Do you see the company moving into other products and services?
Yes, absolutely. So on top of laser, so there are several different SKUs within laser that we are actively looking at. So we are aware that laser hair removal is the largest chunk of the laser pie, but we are actively looking at tattoo removal for lasers as well. Our clinics have been fitted out and appropriately licensed for us to be able to accommodate that with very minimal updates with the appropriate regulatory bodies. Even with the training as well, for us to train up all our staff in laser hair removal would be a very small task, given that our internal training in laser safety has been approved by Department of Health as a formal training course. On top of that, we are looking actively at going into the cosmeceutical sector as well, and cosmeceuticals has a significantly better profit margin than injectables. And we are aware that that pretty much all our patients do consume cosmeceuticals. So these are your moisturizers and other serums. And on top of that, we are also looking at other cosmetic adjacent businesses as well.
Thank you again, jumping around a little bit here, but would the margins be bigger or smaller for a clinic in Bali, noting that it's cheaper for the customer?
Yeah, so when we did the math there, and again, at this point, we are looking at expanding by opening up greenfield sites, as we mentioned in the prospectus. When you look at the numbers up there, the treatments are typically 20 to 30% cheaper. However, the cost of staff is a lot cheaper as well in places like in Asia. And on top of that, the cost of the consumables, such as the botulinum toxin, is a lot cheaper. So, for example, a botulinum toxin that is available in Australia, I'm not going to name brands, but that typically goes for $500 a vial, and the very same one in Asia goes for about $50 to $60 a vial. And the reason for that big delta is the overhead that comes with all the licensing and the regulatory requirements for a TGA-approved medication to be on the registry in Australia. So we think the margins would be higher in Asian countries, considering that compared to in Australia.
Wonderful. Next one. So, what is Cosmetic's track record in terms of customer satisfaction, retention, etc.?
Very high. So we won numerous customer service awards over the last few years. We are the only cosmetic clinic thus far that has been in as a finalist for the Customer Service Institute of Australia Awards, and the winner hasn't been announced yet, so we might win. On top of that, we have a very high rate of customer retention, with the vast majority of patients returning. Again, this number is a little bit difficult and slightly misleading to articulate. And the reason for that is the vast majority of our patients are between the ages of 18 to 35 years old. And the biggest contraindications for getting cosmetic treatments is pregnancy and breastfeeding. So we do usually find that patients do drop off for about 12 to 18 months before they come back as an active patient. We also have many, I wouldn't say incentives, but we are very customer facing in terms of allowing them to come back, especially when the economic times are rough. So we have a price beat guarantee. So patients are able to get the lowest price. If we are not the lowest price, we'll beat it by 10%. So yeah, we do provide a relief for the hip pockets as well on that side, which makes us a default provider for many of the patients.
That actually just answered the next question in terms of price against competitors. So I'll leave that one for now.
Yep.
All right. Last one just before we wrap up. So any ideas for potential partnerships?
We are always open to potential partnerships, both in terms of the offerings that we are bringing in, as well as acquisitions and as well as JVs as well. So if you even consider what we do currently, we don't all the botulinum toxin, the fillers themselves are provided by suppliers. So we don't actually, no clinic in Australia actually owns their own filler or owns their own Botox. So we are successful because we have fostered very long-standing partnerships with our suppliers, and we will be continuing to do so as well.
Wonderful. Well, that's all we've got time for today. As I mentioned earlier, the IPO is currently live and available through liquidity.com.au. And if we've missed any of your questions today, if you'd like further details, I'd encourage you to reach out to info@janemorganmanagement.com.au or jump onto the company website to read the prospectus in further detail. But Vivek, thanks for joining me today, and thanks everyone for joining us.
Thank you.